Good evening, all of you. I welcome you all to Ansarkari, and I hope that you all must be doing great. So, in today's video, we'll be discussing the important articles from 30th of December's newspaper. So, the first important article is regarding the remote EVMs, basically remote electronic voting machines. They are ready to help the migrants vote outside the states. So these machines will allow the migrant voters who are living outside their home constituencies to vote from their current residence. So that is basically, we can say, facilitate more ease of voting to the migrants who are living outside their home states, who are living outside their constituencies, and enable them to fulfill their right to vote. So the remote voter, he must firstly register online or offline within a pre-notified time before the elections with their home constituency returning officer. So firstly, the voters, they have to get themselves registered within their home constituencies returning officer, and after successful verification and their home constituency, the voter will be approved for the remote voting facility. And then booths will be set up near their current homes, and that's how they'll be able to vote. And in an RVM, a single ballot unit, it can cater to many constituencies at a single polling station by using dynamic ballot display. So that is there, and obviously a step that is appreciated. Then talking about India's current account deficit, so it widens in the second quarter to a 9-year high of 4.4%. And looking at its value, so it stands at $36.4 billion. So it is increased from $18 billion, or we can say it was at 2.2% of the GDP in the first quarter, and it has increased to 4.4%, which is a 9-year high. And RBI said that the spike is because of the merchandise trade deficit, and this has contributed to a wider current account deficit. So basically, it means when we are saying that there is a deficit in the current account, so we are importing more than what we are exporting, or we can also say that the value of the imports is increasing given the global uncertainties. And also when we see increase in the prices of the imports, so we call it as imported inflation. So that is there. And okay, so we are directly coming on the business page because there is not much important things to discuss. So again, we'll be just looking at the details of the topic that we were discussing regarding the increase in the current account deficit. So the private transfer receipts, mainly representing the remittances by Indians overseas, they have expanded by 29%. And looking at the services exports, so they have grown 30%, and they were spurred by the rising software exports business and travel services. So we are seeing good growth when we talk about the services sector exports. And talking about the trend in the net foreign direct investment, so they have also reduced, but when we look at the net foreign portfolio investments, so they have increased in the second quarter. So basically, we say that the portfolio investments, they are more volatile, and FDI, they are, we can say, for a longer time period. And we are seeing also, we refer to the portfolio investments as hot money because they can be like invested, and the investors, they can exit the market in a short time period. So that is why that is known as the hot money or the helicopter money also. Then Indian economy presents a picture of resilience amid the global shocks. This is what the RBI governor has to say. So sound macroeconomic fundamentals and healthy balance sheets of the banks, they are providing strength and resilience, engendering the financial system's stability. Then buoyant demand for the bank credit and early signs of a revival in the investment cycle. Even they are benefiting from the improved asset quality, a return to profitability, and strong capital and liquidity buffers of the scheduled commercial banks. And the net non-performing assets, even they have dropped to 10-year low of 1.3% in September, and banking system is sound and well capitalized. So basically, when we're talking about the banking sector, so it is posing a positive picture as of now. And going forward, climate change, dealing with the unanticipated shocks, further strengthening the financial system buffers, harnessing the financial technology innovations, and deepening the financial inclusion, they would continue to be the main focus of the policymakers. And let's take up the Financial Express. So in Financial Express, the first important article is regarding the labor codes. So the center is taking steps to build consensus on labor codes, and they were passed in, basically they were notified in September 2020, but they have not been implemented because of opposition. So the central government is trying to operationalize the labor codes by April 1, 2023, and the government, it had codified over 2 dozen the labor laws, basically 24 labor laws into 4 codes. So you should be aware about what are those 4 codes. So they include code on wages, code on social security, occupational safety, health and working condition code, and the industrial relations code. So these are the 4 labor codes, and labor is a subject that is mentioned in the concurrent list of the constitution in the 7th schedule. And talking about why labor unions, they are opposing these laws, the reason behind that is that allowing the firms with up to 300 workers to decide on the layoffs and closure without any government permission. So that is the reason why the labor unions, they are unhappy with this provision. Basically, the power has been completely given to such firms who are employing up to 300 workers, and the decision completely lies with them. So the government is, however, it is trying to ensure that they get implemented by 1st April in 2023. And let's move forward. Okay, so the explainer section is on the social stock exchanges. So talking about what is the genesis of the social stock exchanges. So these were first mooted in 2019-20's union budget with an aim of listing the social enterprises and the voluntary organizations for securing a funding mechanism from the open market. Basically, we can say they are going to be working on similar lines as the NSE and the BSE that we have, the stock market or the share market as it is there right now. So on similar lines, we'll be having the social stock exchange, and this will be aiming to facilitate raising funds for the non-profit organizations and for the profit social enterprises, and help standardize the social impact reporting and disclosures. And they will function as a distinct division of the conventional stock exchanges. So it is going to be separate from NSE and the BSE. And talking about what are the different criterias as they have been framed by SEBI, that is the capital markets regulator, that is Securities and Exchange Board of India, for recognition as a social enterprise for getting listed on this social stock exchange. So looking at these conditions, firstly, they become important for the prelims examination. So the organizations, they need to demonstrate that 67% of their activities are from those laid under SEBI's framework. And this includes activities such as eradicating hunger, poverty, promoting healthcare, education, gender equality, and financial inclusion. So if an organization is able to demonstrate that 60%, 67% of their activities are based on such areas, so they'll be able to qualify this condition. And the next condition includes a not-for-profit organization must be registered as a charitable trust under the relevant state law, the Societies Registration Act, or the Indian Trust Act, or it can also be instituted in the form of a company under the Companies Act 2013. And it must have audited spending of at least rupees 50 lakh and funding of at least rupees 20 lakh in the past financial year, and it should have been in operation for at least 3 years, 3 years per its registration, as per its registration certificate also. So who all can invest? So institutional and non-institutional investors, they can invest. And talking about the retail investors, they can invest only in the securities from the profit from for-profit social enterprises, and foreign investors, they cannot take this route. And talking about the zero coupon, zero principal bonds, so that can be used as one of the, we can say, measures or a method through which the social companies, they can raise funds. And talking about getting the social stock exchanges up and running, still that needs work, that still needs work, and it is in the making. And there are several proposals and amendments which are required before coming up with a social stock exchange. And the FDI policy also presently does not allow investment in the zero coupon and zero principal bonds. So you should be remembering this. And that's it for today. And these were the important articles from today's newspaper. And thank you for joining in Sarkari. Do not forget to subscribe to the channel, hit the like button, and share the video as much as possible. And you'll be getting the PDF link in the description box below. And thank you so much for joining.